Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Bashardis, and joining me is Senior Investment Analyst Rafi Boyajian. We'll be reviewing the week ahead. So Rafi, let's begin with the Reserve Bank of Australia. Just a few weeks ago, the RBA added an extra 100 billion Australian dollars to its quantitative easing program. When the bank meets on Tuesday, is it likely to announce any policy changes? And are we expecting any big reactions from the domestic data that will come out next week too?
So Maria, as you said, we did get that extra 100 billion Australian dollars at the February meeting. So we're not expecting any changes in the March meeting. And overall, we know that the outlook is looking much better, particularly for Australia, which not only has it done a better job in containing the virus, but also we're seeing a surge in commodity prices such as iron ore, which are all positive for the Australian economy. And this has been what's been driving this surge in Australian government bond yields. So Australian bond yields have joined in the global bond yield rally. So that's likely to prompt some dovish language from the RBA, because they will not want the bond yields to rise too far, too fast, because of course it affects the Australian dollar, not just in terms of raising borrowing costs, but we've seen the Australian dollar hitting the 0.80 dollar level. It has now, we are seeing a bit of a pullback in the Aussie right now, but on the whole, the outlook for the Aussie is quite bullish. So the RBA will be very careful not to sound too optimistic. They will try to stay as dovish as possible, and it's going to be interesting to see whether or not they say anything about this surge in Australian government bond yields. As far as the data is concerned, we're going to get the GDP numbers. So those are going to be for the fourth quarter, but on the whole, they're not going to have a huge impact on the Aussie, because really the focus now is pretty much on the months ahead, and of course what's happening in global bond markets.
Okay, moving over to Canada now. We'll get GDP growth figures for the fourth quarter on Tuesday. In addition, there's the OPEC Plus meeting on Thursday, which might matter more for the loonie. What should we expect?
So we will probably see a slowdown in Canada's recovery in the fourth quarter, because we did see some fresh lockdowns in the winter months. So Canada, like Europe and the US, did see a resurgence of the coronavirus. So that almost certainly affected the recovery. But of course, the outlook now is looking much brighter. We've got the stimulus in the US coming up, so that should boost Canada's economy as well, given how dependent Canada is on the US for trade. We, of course, also have the rally in oil prices. So all of this has been quite positive for the Canadian dollar. Now, oil prices, that could actually be more significant next week than the GDP numbers, because we've got an OPEC meeting coming up. So OPEC Plus meeting, they're now meeting every month. And for this next meeting, it's going to be quite an important one, because they will probably be debating whether or not to raise output. We did see a slight increase in output back in January. Now they're going to discuss whether or not to raise output as of April. If we just get 500,000 barrels per day increase, which is what many people are predicting, and that's, again, quite a modest increase, so it might not have huge impact on the rally in oil prices. But if OPEC Plus does signal that they're committed to raising output further over the coming months due to the improving outlook for demand, on the back of those vaccinations and stimulus, of course, so that could really put a serious dent in the oil rally. So all of this will probably be more important for the loonie next week.
Okay, now in the US, there has been an accelerating sell-off in bond markets. All eyes will be on the latest non-farm payrolls numbers due out on Friday. What should traders look out for?
So the US jobs market has been quite sluggish since December. We are expecting to see a bit of a pickup in February. So forecasts at the moment are for an increase of 110,000. Given that the Fed puts a lot of weight on the jobs market, on employment, so it's really going to be important to see how the labor market evolves in the coming months, because that's probably what's going to determine how soon the Fed decides to begin withdrawing its stimulus. And of course, given the current situation now with the sell-off in bond markets and the jump in treasury yields, we could see increased volatility from the NFP report. So if we see a strong report, we could see a further surge in treasury yields, and that in turn would boost the US dollar. One thing to note, though, is that because, of course, the jump in treasury yields is that the rally there is infecting global yields as well. So if we see, we could potentially see the impact on global yields being greater than perhaps even on treasury yields, and that could also somewhat offset the moves in the dollar. So it's going to be we could see some volatility. It's hard to say how the dollar will quite respond, but most likely a strong jobs report should produce a stronger dollar.
And finally, in the UK, the word is that Chancellor Rishi Sunak may unveil a corporate tax hike to support the UK's public finances. What might this do for the pound?
There's a lot of speculation that there's going to be loads of giveaways in the budget. And of course, given the fact that much of the UK is still pretty much under a hard lockdown, so any extra help would be seen as boosting the recovery further. Now, Boris Johnson has laid out a very cautious plan out of these lockdowns, so we're not likely to see restrictions being fully lifted until the summer at the earliest. So that means there's plenty of months before those restrictions go away, and so more help definitely will be needed. So if we do get extra spending, perhaps some tax reliefs, and of course the extension of the furlough scheme, then all of that should be positive for the pound. However, there is talk that the Chancellor is considering raising some taxes, particularly corporation tax. And as long as the tax rises aren't that big, or at least they will be done very gradually, and we get plenty of other virus reliefs to help the economy, we shouldn't see the pound being impacted too much. But if the budget really isn't as generous as hoped, then that could really deal a serious blow to the pound rally.
Rafi, thanks so much. And thanks for joining us at XM.com.